Okay, good morning. I'm going to talk today about an exciting new opportunity for everybody, including Israeli companies and American companies that want to do business in Israel. And it may affect a lot of our clients and may bring in the door a lot of new clients because of this. So I'm really excited about this opportunity, and so should you. And I'll tell you why in a few minutes. And this is something really brand new, and it applies for both individuals and companies. So an individual could be a rich Kaiser Moshe and who wants to invest and do business in the United States. And it could be also a lot of Israeli companies that want to do business in the United States. And we're not eligible to classify their investment funds as investments to receive additional benefits, which they now will be able to do. In terms of bringing employees here, in terms of getting long-term capital arrangements. And so there really are a lot of benefits to this, and I'm going to talk about them in length here in the presentation. And there is really, the good thing about it, there's no quotas. There's no limitation like the H-1B visa for 6 years. You can have those visas renewed pretty much indefinitely, which is great. And there's no requirements like the L visa that you have to work for the Israeli company for a year before coming here, which is another issue for some of the startups. They start very fast, and then they want to bring a lot of people over and start their operations in the States. So, what is new? Okay. So, the U.S. Congress passed this law in 2012, and for the first time in history, the Americans actually beat the Israelis to something and did something faster. So the Israeli government took its time, took about a couple of years to approve it, and we still don't have regulations implementing this. The government approved it a few months ago, and we have an idea of what it would look like because of other countries. For example, the majority of the Western European countries that have those agreements with the United States. So I can refer from personal experience that we have in bringing those German, French, UK companies and so forth here. And we can guess and have a pretty good guesstimate about what will happen with Israel. But we still don't have regulations, and part of it, and part of the reason why the Israeli government has been so lagging about this is that they don't want to encourage yerida, people leaving Israel, especially individuals who are wealthy, because there's another opportunity in the States. And it still might be a concern of the government, but because there are so many benefits, especially for the high tech, which is really the #1 export, the government should move forward and implement those regulations, hopefully very quickly. Okay. So these are really the 4 main requirements for the E2 visas. Those are temporary investor visas that can be given to up to 5 years, or 2 years for startups, and then you can extend those. And the 4 requirements are: you have to have the nationality with the treaty country, in this case would be Israel, both of the business and of the individual applying for the visa. The person must, or the company, must invest a substantial amount of capital, and we'll talk about it in a couple minutes, what that means. The business cannot be marginal, and it has to be basically an active enterprise. And there should be somebody here that will oversee, develop, and direct the enterprise. And if you are interested, the references are in the Immigration Nationality Act, Section 101, and the regulations are 8 CFR 214.2e. If you have trouble falling to sleep, please go ahead and read it. It's very effective in putting you to sleep. But that's where the references are if you are interested in reading those. So nationality is very simple in the majority of the cases, where you just have to prove that the nationality of the applicant is Israeli by providing a copy of a passport, and the nationality of the business is Israeli. Now, for companies, how do you prove nationality? You have to go back to the shareholders and prove the majority nationality of shareholders. So sometimes it's very easy, and sometimes the companies are held by so many other companies. So there's a parent company in Holland or the Netherlands Antilles, and then there's another holding company in the Cayman Islands, and which some people do for tax purposes. And in that case, it might be difficult to prove nationality. Also, for a lot of Israeli companies who get VC funding, obviously nationalities of some VCs are difficult to establish. For Israeli companies, for example, that are registered in NASDAQ or another public stock exchange in Europe and Canada, again, nationality might be difficult to prove, because obviously it's very difficult to prove nationality of individual stockholders if it's a publicly traded company. We've done it in the past where we could actually prove blocks of ownerships by individual or institutional investors, like for example, Discount Bank in Israel owned a large proportion of one of our companies. So we were able to prove, yeah, this is an Israeli company that owns 30% of this publicly traded company. So there are some issues that might be even in this very kind of straightforward definition of nationality. What's substantial amount of capital? There is no dollar sign or number that the regulations have, and it really will vary on a case-by-case basis, because for smaller businesses, a substantial amount of capital might be $100,000, $200,000, $500,000. For a large manufacturing company, for example, we have an Israeli manufacturer that built a plant and all that in South Carolina. That requires several $1 million of investment. So it just depends on how the business is structured, what the business is supposed to do, and things like that. There have been reports in Israeli newspapers that people could invest $30,000 and get visas, $50,000. That's really too low, generally, to be a substantial amount of capital. And we did have a client who started a very, very profitable business with a $10,000 investment from relatives and things like that, and now it's a $10 million company. But even though now the company is substantial, the initial investment was not, so it would not qualify for the visa. Source of funds is another thing that we need to think about. And because money doesn't grow on trees, the company or the investor can't say, well, I just got the money as a gift or something like that. You actually have to prove that the money is from a legitimate source. So my rich Uncle Moishe gave it to me, or my daddy gave it, or something like that. That's not good enough. You actually have to prove how your uncle or your father or anything like that, how you acquired, how they got the money and how they transferred it to you. And so there might be some issues here. For companies, generally, we don't have an issue because it's either investors give it, stockholders, VCs, so there's not a whole lot of issue with companies. But for example, for companies that are held in tax sheltered countries, for example, Cayman Islands, or things like that, you want to make sure to prove taxes were paid, it's not an illegitimate source, and things like that. So that's the source of funds. Any questions so far? Pretty clear? Okay. So marginality of the business. The point of this investor visa and the whole investment treaty is to make sure to have a large economic impact on the U.S. economy and in the Israeli economy, and really encourage job creation, investments in fund, in salaries, paying taxes, equipment, things like that. So what is a large economic impact? Again, the regulations do not say, they don't give a dollar sign. It's just something that we have to establish each time that we file a case. So if it's a business in the millions of dollars, and you have dozens of people on payroll and things like that, that's generally will suffice. The challenge is that a lot of the Israeli startups are starting up small, especially here. So they may open up a branch office, a sales and marketing office, or something like that, and then it's not really enough. And let's say the first couple of years they lose money, they have only 1 or 2 extra employees, and things like that. So you really have to think about a longer-term business plan, let's say a 5-year business plan. You have to look at projections. You have to figure out, okay, is this going to be a problem for a marginal business or not? And sometimes, for example, if you have a joint venture with a larger company, for example, one of our clients has signed a 3-year deal with HP out in California. And so longer term, the contract has a significant amount of money, even though in a short term it does not. So that could be used to show a large economic impact of the business. But it is something to kind of keep in the back of your minds if you are dealing with an Israeli startup about that. And the other thing to think about is the business has to be active. You can't just sit and trade stocks or buy a house. That's a question that I get all the time. Oh, what if I buy a house? I have $500,000, I want to buy a house. Can that qualify me for an investor visa? The answer is, of course not. You can watch your tree grow in your backyard, but that's not that's not an active investment. So there is in the last few years a lot of boom in Israeli real estate investors. And I don't know if you all have experienced that here with your clients, but there's a lot of investment groups, individuals who are wealthy or that want to become wealthy and they want to invest in Israeli real estate, in American real estate. So obviously, if you buy a house, that's not going to be, well, okay, what about if I represent a group of investors and we have, let's say, $1 million, $2 million, $3 million together, and we want to go into the house renovation business. So we're going to buy houses here, we're going to renovate them, we're going to sell them. Well, it depends, like everything else. So if you you buy one house and you renovate it for 6 months and then you sell it, or may not sell it, depending on the market, then it doesn't qualify, or it most likely will not qualify you. However, if you build or if you renovate a large apartment complex and then you have the maintenance people and the leasing people on payroll, and you really have a rental office with 50 units or something like that, that most likely will qualify as an active business in real estate. Office building, commercial property, things like that, again, it goes back to job creation, to a larger business and not being a marginal operation. So that's something that, again, if a client comes to you and say, okay, I want to get into the real estate business, you really have to advise them about this. And a lot of times, what I also notice with Israeli clients, this has nothing to do with the visa, is that they tend to be overly optimistic about the U.S. real estate market. And they don't realize it takes a lot of time and knowledge to actually turn a profit. And the building here is expensive, payroll is expensive, building material is expensive. So even though the land may not be expensive as it is in Israel, there are a lot of expenses, legal expenses, insurance, location. A lot of people just come from Israel looking in Atlanta or some places in Florida. It's like, oh, this looks like a great location. And then they figure out, well, College Park is not really the best neighborhood. And you have break-ins and vandalism, and so part of our mission, and I think when you talk to your clients about these opportunities, is to kind of sit them back and kind of caution them, because there are a lot of things to think about. And sometimes, again, Israelis being overly optimistic, they don't want to hear it, but I think it's kind of our responsibility to tell them and educate them about what's going to happen, what are the risks, and things like that. Instead of just assuming, oh, they know, they're really sophisticated investors and things like that. A couple of other things that have to happen is the investor or their executives, managers, or other employees have to develop and direct the enterprise. And that's generally easy to show through managerial control, through shareholding, and things like that. That's pretty easy. And the application procedure, again, the regulations have not been out yet, but this is basically a good estimate based on what we see in Western Europe, is that you file an application with the U.S. Embassy in Tel Aviv. The application will take about 30 to 60 days. And the benefit to that is you don't have to deal with the immigration service in the States, which is just wonderful because the immigration service sucks. You can also get a blanket approval for the company. So once you go through all these hoops, the company is going to have an approval for 3 years, and then each additional employee that they want to bring over can go directly within a week or two and get a visa. So it's super fast. It cuts a lot of lines and red tape in the United States with the immigration service. And so the visa can be done for 5 years. Startups up to 2 years, because they want to make sure, well, if you're a startup, you actually do have an economic impact and you are hiring the employees that you say that you're going to hire and things like that. But you can extend the visas after the 2 years period. And there's really no limitation on the amount of time that you can apply for renewal. So every 5 years you can go back and say, okay, I need a visa for another 5 years, and so forth and so forth. So it's really a great visa, and we use it a lot for Japanese companies and Western European companies, because really there's a lot of movement of employees between the countries. After the initial 30 to 60 days, you get an interview, you get questions and things like that, and once the company is approved, again, it's a blanket approval for 3 years. So family members, that's another great benefit of this. Family members could be approved for derivative visas, of course, but the main benefit is the spouse can actually work, which is not a benefit if you're here on an H-1B visa or some other type. So it's very good for spouses and family members, because a lot of time in relocation, the reason a relocation can fail is when the wife is sitting at home and is just unhappy, just basically. So the ability to work is really important in the success of the entire relocation status of the family. And children, like other visas, can attend school, and child is a child until they're 21. Or if they get married before, they're no longer a child. But 21 is the cutoff. So the opportunities. There's opportunities both for companies, both for individual investors. For example, people in the diamond industry that do a lot of business transactions in the United States and Israel. The large Israeli businesses can benefit from it because they can get access to visas faster and with less hassle than to go through the immigration service. And also the American companies that want to invest in Israel could now get work visas for their employees. And that's a big deal because unless you're Jewish, it's very hard to get a work visa in Israel. And there's a 5-year limit, and you don't qualify now based on investment alone. So this will actually open the doors for American companies to make large investments in Israel. So it's going to help the U.S. and Israel trade. And there are a lot of estimates out there on what the economic impact will be, but I guess we just have to wait and see. But I think it's going to be a good thing for both Israel and the United States in furthering the relationship and the trade relationship. So, do you have any additional questions for me?
Karen, I've got one.
Yeah.
You mentioned real estate. Let's say there's a partnership that's already set up here, and that they're investing in rehabs and renting. So what if can then someone come buy into that partnership and move over here with that visa? And is there again that minimum? Is it 30,000? Is it 10,000? Is it? What's your comments?
So the minimum generally is $100,000. 10,000 or 30,000 is not going to get you a visa because it's not going to be substantial enough. But you can buy into an existing partnership either through with real estate, or you can buy into an existing business. So if you have, let's say, if you run a McDonald's and you want to sell it, a franchise or any other business, then you could have the investor or the investor group buy into that. Of course, then, okay, what are you going to do with $100,000? What type of business can you find? And you have to have a majority shares. So most of the time, it's going to be more than $100,000 to actually acquire an active business. But again, some companies, I've seen it with some other investors. Some British investors, for example, that could buy restaurants that were in the red for very little money and turn them around. And so there are opportunities in business here, including real estate, like buying distressed real estate and turning it around and things like that. And it's it's a very lucrative opportunity both for our clients and for American companies going to invest in Israel. At the same time, again, mentality is different, but a lot of times the Israelis want local control. So what happens with a group of investors, they send a family member or a partner or one of the investors here, at least on a monthly basis, bi-weekly basis, to oversee the investment. For example, if it's a construction, they want to have somebody here going over and overseeing the construction. So that person that's often visiting here would have to get a visa, because at some point the immigration personnel at the airport is going to stop them and say, you can't come here on a tourist visa anymore. So if people are spending here a lot of time or going back and forth very frequently, they should apply for a visa. Otherwise, they could find themselves at the airport getting stuck or locked up in a cell and not being able to get entry, which is pretty significant.
Yeah, are there any tax implications when you have such a visa as opposed to a pretty traditional green card type of visa investment?
So for the E2 visa, there's actually much more flexibility than you have with a green card status. For some people, it's actually more beneficial to stay on E2 status because, for example, capital gain taxes in Israel is actually lower than here, although the marginal tax rate is higher. So when you're on an E2 visa, if you are working for a subsidiary of an Israeli company, for example, you can get paid in Israel. So if you're a resident of Israel, you want to be subject to Israeli taxes, and there's a tax treaty between the United States and Israel, you can choose to be a resident of Israel for tax purposes, if that's more beneficial for you. And you can get paid in Israel, and they pay the Bituach Leumi, the Social Security, in Israel if you're not going to stay here long term. If that changes and it's more beneficial for you to be subject to U.S. taxes, then you can switch to be a U.S. tax resident, and then you do the credits with Israel. But it just depends on the situation. But sometimes it's much more beneficial to stay in an E2 status and not switch to a green card for tax purposes, especially if you're, for example, if you're one of the co-founders of a startup, and let's say the company got an investment from the chief scientist's office, and so you don't want to change the ownership, and it's better for you to stay Israeli for that reason, for tax purposes. Thank you so much.